Guys, it's Doc's Market Minute for Tuesday, April 12th. Now, over the last few months, we haven't really heard that much from what caused all the volatility to begin with, and two of those were China and oil. So what I'd like to do in today's Market Minute is look at China and oil and look at the longer term trends, look at what the price action is showing here, show what would have to happen for the next shoe to fall and or for these markets to start to recover and support broader markets across the board. And to do that, we need a little perspective. First of all, if we look at the FXI, so this is not the perfect Shanghai index. This is a representation through an ETF, but you know what? It's good enough for what we need right now. And what we're seeing is that since the 2015 high of the FXI, or the Chinese stock market, we've seen a vicious sell-off, which has caused a monthly downtrend, lower highs, lower lows, and so far this is only a lower high coming up here. Now, what everybody's focused on is the fact that China has rallied over the last few weeks here, all right, but the perspective is still that this is a monthly downtrend, and these don't just stop on a dime and reverse and go higher from here. So this has a long road to go before this is going to recover. What we'll have to see probably is going to be seen on the weekly chart, which is over here. So we've broken this downtrend, all right, so this is broken above this downtrend, but so far this is nothing more than a lower high and likely to roll over. Now, one of two things can happen. Either this is going to roll over and turn into a new low, or for a more bullish case, this will pull down at some point here. Wherever it tops out, it's going to pull down and create some type of low next. And if that creates a higher low and then subsequently breaks above there and makes a higher high, then we know that we've had a change in polarity here. Now, this does not fix everything. All this means is that we have a more extended monthly swing higher. And eventually what's going to happen is the monthly chart too is going to have to put in some type of a higher low and a higher high combination to start working on an uptrend here. And who knows how long that is going to take, right? So we have to be patient if we want to trade with the trend, because right now the trend is saying it's still moving to the downside. We don't want to be trying to catch the falling knife until we see evidence of a reversal. Now let's move over to crude oil. Not surprisingly, we have almost the same story here in crude oil, right? We have a monthly downtrend with lower highs and lower lows, lower highs, lower lows. And again, what everybody is focused on here is this, 20% plus rally that's off the bottom. So everybody comes to me and says, hey, crude oil is in a bull market. No, it's not in a bull market. It's moved 20% off the bottom, but that hasn't changed anything in terms of the major trend, which is still to the downside. So what has to happen here is going to be keyed off of what we see at the daily chart. So the bearish interpretation of this, if the downtrend is still in force, what we're going to see is this little blip here is going to turn into a lower high, and then this will fail to the downside. So that's the bearish interpretation, because what we have is we still have weekly and monthly charts that are making lower highs and lower lows. If we see that happen, then we know that the gravity is still pulling crude oil to the downside and supply exceeds demand. Now, the bullish interpretation of this will be if we're able to see the price break above this level here. And by this level here, I'm looking at the high of this is about $42.50 per barrel on the continuous contract. So if the price is able to break above 42.5, all right, that extends the uptrend. And what this means is that we have more of a weekly swing to the upside here. Now, I still think that this is going to have trouble getting above and beyond 45, and this could just roll over as well too and create another lower high up there. But if this creates a subsequent higher low and then rallies and goes above 45, then what we're seeing is merely an extension of this monthly swing higher like this, okay? So we're still not out of the woods, and we may not be out of the woods for some time yet with crude oil until crude oil itself is able to put in some form of higher low and a higher high combination and change that polarity back up to the upside again. So this is how all the puzzle pieces fit together. If you understand how the monthly and the weekly and the daily, and in some cases the 78-minute chart, which I have just a little bit over here, fit together, then you can start to see reversals form before they actually occur. And you can set yourself up by framing in the price action, where you can frame it in and say, okay, above this level, then we know that it's a bullish outcome. Below this level, then we know there's a lower high setting up, and it's going to be bearish. So we can start to anticipate how we're going to trade based on what happens. In a way, you're sort of programming yourself based on what actually happens versus your emotions or your feelings about the market. Okay, so that's my take on those two very important markets, and we'll see how 2016 finishes here in the latter three quarters as we get through the rest of this year, and a lot of it's going to depend on how strong those markets are. Thanks for listening. We'll see you soon.